Hi, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO of Zia Group here with eXp Realty on the Central Coast, and I'm here to deliver you the March South Santa Barbara County real estate market update. We're here in March, but we're going to be going over all of the sales statistics as of the end of February. We have all those statistics live now, and we're in a bit of a rainy March at the moment, and we've got some really interesting things going on. We've had lots and lots of rain. We've had recent banking failures, the likes that we haven't seen since 2008. We have higher interest rates than we thought we were going to have this year, and we have an overall lower number of homes available for sale. So while we have lots of buyers willing and able and wanting to buy homes, we don't have the homes to sell them. So all of that has created essentially a lower sales activity environment. I mean, we're talking about a little less than 40% fewer sales have occurred so far this year compared to last year. And this is essentially the lowest number of home sales that we've had in the last 10 years. So the sky isn't falling, and frankly, the real estate market is still pretty active, and I'm going to talk more about that. In fact, almost every one of the listings that our team has brought on so far this year has sold, still with multiple offers, and in some cases, 8, 9, 10 offers. And we've had just great sales experiences for those sellers. So the market is active, but the big factor is we still have a limited number of homes for sale, and that is stalling the real estate market with less sales activity and also stalling some of the home price appreciation as well that we've seen. So first, really quickly, let's talk about banking failures. This was a March event, but essentially it's the biggest banking failure since 2008. We had two banks, the Silicon Valley Bank and the Signature Bank of New York. Both essentially face closures, with the FDIC having to come in on both of them and take over the banks within days of each other. They had combined assets of $220 billion, essentially of combined uninsured deposits. So over 90% of the deposits at these banks were uninsured. And so the FDIC and the Fed had an emergency meeting and essentially ruled that they are going to be insuring all of those deposits, which is very good news for all of the depositors there that had uninsured accounts. They were concerned that they were going to get paid back cents on the dollar for those deposits. Now they have the peace of mind that is actually going to be covered. And we look at this as good news. What this is going to do to the real estate market as a whole, we don't know. There's a little bit of lingering fear and uncertainty in the banking environment, even though there are a lot of people that are pointing to these are more isolated events. There's always two sides to every coin, and just because of the size and magnitude of these two events being the biggest since 2008, there's some uncertainty and fear. Now, the interesting thing is that uncertainty and fear may not be a negative element for our real estate market, because one of the hedges when you have some concerns with the banking environment is a lot of people are choosing to spread out their deposits or even withdraw some of their deposits from the bank because they just have some lingering concern, even though the FDIC and the Fed are essentially covering and insuring those deposits that are there for these two banks. What happens if that isn't the case and one or more banks fail in the coming weeks? And so some people are going to pull their money out and they're going to look at different vehicles that their mind might be safer temporarily. And one of those vehicles that can be very safe is real estate. Real estate often sees appreciation. You get use of that real estate or rental income. And if it's a rental property, you get depreciation, which is pretty incredible from a tax write-off standpoint. And regardless, even if those three elements weren't there, your money is essentially, you have something tangible that is securing your money versus a deposit in the bank that, if it's above that insured amount, may or may not be insured in a worst case scenario like this. So we've got banking failures. That's on people's mind. The other kind of element is rain. We've actually had nearly 30 inches of rain year to date in Santa Barbara, which is nearly twice as much as we typically get in an entire year. And because our local climate is 70 degrees and sunny most of the year, when it does rain, there's a lot of people that don't want to go outside. And when they don't want to go outside, they don't really want to look at real estate. And so rain also is a factor where it slows down the real estate market. You don't have buyers wanting to go out and look as much in their home shopping, and they're not used to it because Santa Barbara gets so much sun. And also when home sellers are trying to put their homes on the market, one of the limiting factors is when it's pouring down rain, you can't do the photo shoot, you can't do the video shoot. So even some homes that were planned, that people had planned to bring on the market, those have been delayed in their plans given the rain and what that has done to their plans. So rain is another factor. Yes, interest rates have been higher, like we've already talked about in the past, but the big key element continues to be the lack of homes to sell. If we had more homes to sell, we absolutely would have quite a few more sales, and I actually think that this year would be a very strong real estate market, including some appreciation if we had more homes come on the market, because that would stimulate activity there. As far as home sales activity, just to put it in context, the number of sales this year is about 5% more than the years of 2008, 2009, 2010, 2011. That 4-year period, that was kind of the second half of the depreciation cycle of our last market cycle. We are still selling more real estate this year compared to those 4 years, but just about 5% more. So as far as like the number of sales, the market kind of feels a little bit like those years, even though the underlying cause is very different. In those years when the market was going down, the issue is we had an oversupply of homes, lots of home sellers that wanted to sell, but we had buyers cautious to get in the market, and a lot of buyers that didn't want to buy. They were waiting to see what happened with the market. Our market right now is very, very different. The underlying economics is we have lots of buyers wanting to buy and willing to buy now, but we just have home sellers that don't necessarily know where they're going to go, or for whatever reason, they're not putting their homes on the market. So it's complete opposite kind of economics then, even though the problem from a real estate activity standpoint is the same. We still have fewer number of sales. It's just the underlying cause is different there. Try to think what else might be relevant here. Homes are still selling. Actually, homes are selling closer to their asking price in February. They did in January and the previous month, which is great. So right now they've been selling about 3% below their last listing price and about 4% below their original listing price. Condos, on the other hand, are selling at really 100% of their original list price, and as wild as it sounds, 102% above their last price. Kind of odd, since it's taking about 2 months on average to sell a condo, but they're selling either at asking or above, even after that amount of time on the market. And part of that is just the amount of condos that are available for sale right now. To put that in context, we have about a third of the amount of condos for sale today, as in, let's say, the market of 2019. So that's one of the big discrepancies there. As far as average and median sales prices, a lot of people are wondering what's happening to home prices. Both the median and the average home price are down year to date compared to last year. So you might think that, okay, that means that home prices are going down, and that's a long-term trend. That's not always the case. I mean, good examples of that is in 2015, 2017, and 2020. All three of those years actually had lower median sales prices than the previous year, even though the market trend since the end of 2011 has been up from an appreciation standpoint. We've still had these little years that were these little blips, often because we had big run-ups the previous year and then the market was settling. Is that the peak? Is it not the peak? And then they've continued to go up. We don't know what's going to happen this year. There's a lot going on in the economic climate, but I do just want to put that in context. We've seen this in previous years that haven't precipitated a multi-year downward trend. They've just been little blips. Also, kind of an interesting fact, the median sales price in February was the highest it's been in 6 months. So that's also good news. Good news from that perspective. The last measure of good news that I'll share is that when we look at the number of homes that have come on, we look at what's the percentage of the homes that have come on the market in February that actually sold. That percentage was 97%. That is 10% higher than last February, where only 87% of the number of homes that came on actually went into escrow. So there is some optimism there. We'll see what happens with the banking environment, if that's going to be a boosting factor for our real estate. I've already had some real estate clients kind of communicate that they may want to shift more resources into real estate, or if that's going to be a softening factor. We've also had some people express some concerns and just causing more hesitation in all of their investing across the board, kind of more of a paralysis. So there you have it. If you have any questions, please do reach out to me. We'll give you another market update next month. If you need any help from me or my team in the meantime, please do reach out to me or your preferred Zia Group Builder partner. We'll give you a private confidential consultation and help you navigate the interesting economic waters we have and the kind of the fun real estate market. Stay dry and stay safe.